Both the Chinese and the US economies are much stronger than what people were assuming. If we look at the latest PMIs, it seems that China is weathering the storm of the trade tensions in a much better way than many had feared. In fact, what we are seeing is that leading indicators show that it will be suffering, but not in a dramatic way from the trade tensions. And it looks like the official messages coming from China actually tell us that the Chinese government is willing to absorb up to 50% tariffs. In any case, the trade tensions and trade negotiations continue, so that is an element to be looking forward to. Trade negotiations are likely to happen, and obviously right now the headlines are about no changes, which is a logical position when somebody is in a negotiation. In the case of the United States, what we can see is actually significant strengthening. The Federal Reserve of Atlanta has a 3.8% growth for the second quarter. A very significant improvement. And if we look at the revision of GDP in the first quarter, what we can see is that despite a reduction in government spending, the private sector has actually strengthened. There is also a very interesting table coming from the Federal Reserve of Atlanta that shows that there is no inflationary pressure in the US economy, both at the core level, at the supercore, and in the different aspects of what they look in CPI. The PCE index also came better than expected. All those elements show that the United States economy is significantly stronger than headlines suggested, and the doom and gloom scenarios are not happening. Furthermore, what we continue to be is prudently optimistic about the outcome of negotiations. So all of that leads to an improvement, not a worsening, of the macroeconomic scenario.